In this video, I am going to explain to you guys the real reason why Meet Kevin sold all of his stocks. And it took the stock market to begin to rally a little bit for me to really realize exactly what happened. But you know what? I think I know. I think I truly know now the true reason Meet Kevin sold all his stocks. And it wasn't because of the Fed, or he thought that a recession was going to come, or a looming disaster, or raising interest rates. It wasn't because of any of those macroeconomics that he said in his video. You guys want to know the real reason why he sold his stocks on January 21st? It's because he panicked. And the reason why he panicked is because he was in bad companies. He invested his money in terrible stocks. How do I know this? Well, let's do some looking. And I'll put everything on the screen. So, if we look at VOO, it's the Vanguard's S&P 500 index. It tracks the S&P 500, right? So let me just put screen record on so I can put this on the screen. If we look at VOO, right, and we go over to January 21st when he sold. When he sold, VOO was at $401, right? Fast forward to today, VOO is at $414. Let's look at another stock. Let's look at Google, another very good company. 3-month chart. On January 21st, when he sold, Google was pretty much at the bottom. So he sold Google pretty much at the bottom. Well, actually, I don't know if he sold that one or not, but you guys get the point. My point is I'm showing you guys the big boy stocks. So Google, 2,600, right? Today, Google's at 2,800. Let me give you guys one more stock. This stock I'm invested in. I absolutely love this company. Let me give you guys another one. Apple. Let's look at the 3-month chart for Apple. On January 21st, when he sold, Apple was at 162 when he sold. Today, Apple is at 174. Do you guys see where I'm going with this? Let me show you where I'm going with this. Had he just held good companies, good stocks, and index funds, there would be no reason to sell. As a matter of fact, if we're looking at when he sold, he would have made money had he just held. But you know why he sold? The real reason why he sold? It's because he will not admit to you guys that his stock picks were horrible. So you guys saw that Apple is up past where it was on January 21st, right? Google, VOO, S&P 500, everything is recovered and actually went higher than where it was on January 21st, right? Okay. Remember, he picks terrible stocks. So let's look at the stocks he buys. Matterport, right? Let's look at the 3-month chart for Matterport. On January 21st, Matterport was at $10. Today it is at $8. It still hasn't recovered. Okay? Let's look at some of his other favorite stocks that he always talks about on his YouTube. Let's look at Affirm. On January 21st, Affirm was at $57. Today it is at $44. Are you guys getting this yet? This is why I told you we're going to use Meet Kevin as a learning example. We're going to learn from this guy because I told you guys he is not a good investor. He's a terrible investor because I'm not going to brag about myself, but if we're being honest, my portfolio looks great. And I haven't sold a single thing. Nothing. Only thing I sold was a few small cap growth stocks that I wanted to get out. But my main portfolio, like everything, like Apple, Microsoft, Nvidia, AMD, my index funds, haven't sold a single thing, and I'm up huge. Just by holding. Didn't even sell. I just dollar cost average. When everything started going down, I didn't panic sell like he did. I just bought more. Now I'm up huge. See what I'm saying? I can't remember what the rest of his stocks are. He has so many. But my main point is all of his favorite growth stocks that he was in haven't recovered. So the real reason why he sold out is because he was in terrible trash companies. And that's why he's a bad example to follow, because you're not supposed to have all of these unprofitable growth companies in your portfolio. I only have like 3. I only have a few. Oh, I just thought of another one. Did I say SoFi yet? I don't think I said SoFi. I don't think I did. If I did, I'll just cut it out the video, but I don't think I did. So let's look at SoFi. January 21st, right? January 21st, SoFi was $13.89. Today, the stock is at $9. That was another one of his favorites. And now I just thought of another one. Look at that. Robinhood. He was really big on Robinhood in January. And he probably sold that too because he definitely owned the stock. Robinhood, 1298, 1296. So Robinhood's about break even, but we all know Robinhood is a terrible company. So what I'm trying to tell you guys overall is the real reason me, Kevin, sold his stocks is because he was in a bunch of terrible, bad companies. And let me tell you guys something. He is a terrible example to follow because had you had your portfolio more structured to mine or like the other great investors, not saying I'm a great investor, but the good investors own Apple, Google, Microsoft. They own all of the winners, all of the big boys. Costco. Matter of fact, I own Costco. Costco is up huge. Let's go to Costco. I do own Costco, and had you just held Costco, you'd be up huge. It's even up past where it was before. So Costco on January 21st was 481. Today it's at 558. Even if you look at its high in December, it was at 566. It's dang near almost at its high. This is why you don't panic sell. This is what Kevin won't tell you. This is what that ego and narcissism come in. Making you think, oh, I'm selling because I think this and that and the Fed and the dinosaurs and the meteors and blah, blah, blah. And oh my God, I'm so smart. No, you're not. That is not how you invest, people. Had you just held good companies, you'd be up right now. But had you listened to this lunatic, you'd be down huge right now. And you would create a taxable event because you sold your stocks when all you had to do was hold your investments. Now, I agree. If you were in Matterport and SoFi and some of these other growth companies, I agree. You probably should have cut your losses if you had too many of them. I have SoFi in my portfolio, but a tiny percentage. I got DraftKings in my portfolio. I got Snapchat in my portfolio, but a tiny percentage. So whatever those stocks do, it doesn't matter because they make up less than 5% of my portfolio. The bulk of my portfolio, Apple. I got a bank stock, Bank of America, Google, Costco, VOO. You see? That's the bulk of my portfolio. And when you hold great companies and stocks and index funds like that, it doesn't matter what the market does. Because those companies and those index funds are so great, they're gonna go up in the long term. And we're seeing this right now. It didn't even take very long. What was that, a few months? In just a few months, everything's back up. So I held my stocks and I didn't create a taxable event, and my assets are going right back up. It's almost as if I didn't lose any money. That is how you invest, ladies and gentlemen. Not like me, Kevin. Stop listening to him. I'm trying to tell you guys, I'm not a hater. I'm not. I really have no hate in my heart towards this guy. I just see a bad investor with a huge following who is leading a lot of people in the wrong direction. That's all I'm trying to tell you guys. That's it. He won't tell you guys the real reason why he sold, but I have just revealed right now the real reason why he sold. If his portfolio was Tesla, Google, Apple, Microsoft, Nvidia, AMD, good stocks, and a few index funds, maybe like a VO, VTI, QQQ, he wouldn't have had to sell his stocks. But the reason why he had to sell his stocks is because most of the stocks in his portfolio were not good companies. They were trash, garbage stocks. And that's the lesson here. Do not have too many small cap growth companies that are unprofitable in your portfolio. That is not how you invest. Put companies in that are profitable, good balance sheets, good fundamentals, good growth numbers, winners in their field. Microsoft is a winner in their field. Nike is a winner in their field. Google is a winner in their field. Apple is a winner in their field. Those are the stocks you stick with. You build your base. Then when you want to add a little bit of risk, you take a tiny percentage of your portfolio and you allocate it to those risky stocks like Matterport, SoFi, and Affirm. Okay? That's how it's done. And there you go. My little rant is over, but I think I did a good job revealing to you guys what happened here. And honestly, now that I really think about it, I truly believe that that's what really happened. So there you guys have it. Thank you guys so much for watching this video. Feel free to like, share, and subscribe, and I will see you guys in the next one.